All right, guys, how's everyone doing? Paul Singh, market speculator. Our third mentorship session. Let me know. Give me a shout out here. Is all trade report members here? It's not to the public. This is for you guys. Basically, a new thing we started. We're on the third one, where um, you guys can get more than the daily reports and what's going on in the market. Basically, this is to help you in your trading. Kind of a, we can't do it one-on-one, but this group setting is really good. And today we're going to do trade reviews. I got one person saying no audio. So can you guys hear me okay? Sometimes it's just one person who doesn't have their volume on. Or I hope I'm saying your name right. Is that Iyad is having issues with audio? So let me know, guys, if you can hear me, if you can see me, which is not really that important, but most importantly, can you see my screen? So you should see charts in the background. I still have the day trading set up here, but I'll switch that in a second. And then the outline here of what we're going to go over. Okay, so Iyad, I think it's on your end. Everyone else seems to be hearing and seeing fine. So, and then bear with me today. I'm having some throat issues. I've been traveling a lot and uh, talking a lot, screaming a lot. So you're gonna hear a lot of probably coughing and stuff. But we'll get through the good stuff here. Gonna give it a few more minutes just to make sure everyone's in. We've got a pretty good turnout here. So you try to attend as many of these as you can live, because this is where I can help you one-on-one, and I can see your questions here. I've got the question box. I can see your questions here, and we can work through this together. Obviously, there's going to be recordings. You already have the last two recordings if you didn't attend, and you can always go back and watch them. But I really want this to be something that helps you guys out personally, specifically, so you guys can ask me. I'm sure when you're listening to the reports, there's questions you might have, and some of you guys email me all the time, and that's great. I get back to you guys as fast as I can. But this is a really good way to do it. And we're doing this twice a month. Usually it's every other week. We had to skip one week because I was out for 4th of July weekend. But we do them twice a month, usually every other week. And I'm going to mix up the time. So we've done two of them at market close. This one is morning for me. It's around lunchtime for you guys on the East Coast. And then I'll mix in some in the evening too. So for those of you, who are trading in the daytime or working in the daytime, which is a lot of you who can't attend these, we'll do some evening ones as well. So everyone gets their chance. Okay. So it's been a few minutes here. I think we'll go ahead and get started. And before I even get to what we're going to go over, which is a trade review. So I'll do a quick, this will take me about 10, 15 minutes to get through, should take about 10 or 15 minutes. And then after that, we will do the trade reviews where you guys let me know the trades you've been taking and I'll go through and watch them. Trades outside of, the trade alerts. So if you've taken focus list, stocks maybe from our focus list, but I didn't necessarily trade them, which is really what you should be doing. The trade, initially when we started this whole thing, it was the daily reports to help you kind of synthesize all the information that make the trades. But people wanted to follow what I was doing, so we started the trade alerts. But the trade alerts should always be a guide. Yeah, it's what I'm doing, but you don't have to be taking them. Your account might be, obviously set up different as well. So maybe you can't take all the trades I'm taking, especially if you have a smaller account. But you can use my trades as a guide, but you don't have to do exactly what I'm doing. And some of you are actually beating me this year, crushing me this year, which is amazing. I love when I see that. But the trades you've taken that I haven't taken, or if you took a trade that I took, but maybe you traded it differently. Maybe you entered the same day as me, but you exited at a different point, either earlier or later. Maybe you did better on it or worse on it than I did. So we can do that as well. But if it was just, kind of verbatim when I got in, when I got out, then we don't need to review that. And I'll maybe review some of mine. Here's the trades we've taken this year. And I'll use these as a guide on how to do the trade review. So part of this is reviewing your trades. Part of it is showing you how you should be doing your trade reviews. And before I get to that, let's quickly just look at the market intraday, since you guys have all probably either read the report or more. What you should be doing is listening to those, 5 to 10 minute videos. And you guys know that this morning the market was gapping down pre-market, and it's basically at those levels. So if we see here, We had this big run into 280, and now it's pulled back to 276 SPY. Now we want to see today, and it's early in the day still. We're only 2.5 hours in. We've got a long way to go till 1 o'clock my time. So till market close. And we want to see, does this gap level hold here? And if it does, that's a good sign. So we don't want to see this slide from 0.7, and we're actually hitting lows now. We were looking much stronger earlier. We don't want this to see this slide to 1% or higher. And then if it reverses, that would be fantastic. So if we end up closing green, even if there was a little bit or towards the highs, even if there's a little gap down, or if it were to reverse completely, and that still could happen today. So we want to watch for that and be patient and see what happens. If the gap down stays, we won't take any trades. If it reverses, maybe we could even add stuff. Qs basically are doing the same thing, and IWM are doing the same thing. Is doing the same thing. So that's what we're watching for right now. And when I sent the report, we talked about our current positions. Some of it relates to what we're doing today in terms of trade reviews. Let's look at those positions. So HUYA is stop at 29, and it didn't even go below 30 today. And so we're in 4 positions right now, which is HUYA, our SRPT, Netflix, and PanW. I talked about this in the trade report, but this is important, and we're going to talk about it in the trade reviews when we talk about how we grade our trading. You can see here that what have our wins been coming in at? If you see here, and I think this is completely updated. I might have a trade or two missing. If I do, let me know. But I think that this is all the trades up to win yesterday's exit. But look at the size of the wins: 1395, 1640, 2000. This one was small because we ended up going kind of break even on this as it pulled back. But 1500, 2355, 2942, 3000, 17. So that's the size of what our wins have been. Our losses have been very small. Mostly, for the most part, under 1%. 672, 949, 948, 870, 11, 500. These were a little bigger. This was a bad stretch in here back in spring. But for the most part, we've been doing that risk the way we want to, and right now it's working out really good. So if we had got stopped out today, and we still could, of all 4 positions, which would suck, being 4 going 0 for 4 like that at one time, which sometimes will happen when the market tanks out of nowhere and you're caught in positions. But where we have our stops placed, which makes sense, each one of these stops is logical in terms of where we've placed it. For HUYA, Netflix, SRPT, and PanW, roughly I'd be losing 750 on PanW, around 500 on Netflix, around 500 on SRPT, and around 600 on HUYA. So combined, it'll be somewhere between 1,700 and 1,900 for 4 trades. And that basically is the same amount as one IQ trade, or it's less than one UWT win. It's less than one Facebook trade. So 4 trades would basically be the equivalent 4 losses if that happened, and obviously we don't want that to happen. I got some emails that it sounded like in the morning I had this expectation that all 4 were going to lose. That's not the case. I'm just thinking worst case scenario, and that's where I always start with, kind of on defense. So 4 of those trades is less than a lot of one of our wins, and that's exactly, I don't mean to be patting myself on the back, because I do crush myself when I do bad things, like back here. Part of this was just unluckiness, but I did make some mistakes during this period as well. Those of you who were with me at that time, I loosened some of these stops, got caught in some gap downs, maybe let them run a little more than I should have. So, but here we're doing the risk reward exactly as we should be doing. So that's the thought process going in today, and actually everything is working good. We haven't been, not only have we not been stopped out of any positions, HUYA is actually green on a red day, which is great. Netflix is only down a little bit, and essentially break even now practically, and while the market is down. And then SRPT and the other one, SRPT and PanW are holding up. I think PanW is green as well. Yeah, PanW is green as well. So we're actually having a really good day today, better than expected considering what the market is doing. But again, worst case scenario, if get stopped out of all four of these positions, it's not going to hurt us at all. So that's how you want to be trading. Okay, and I'm not always trading like that. I make mistakes too. I have to do trade reviews. I have to make adjustments. You know, when I went through this period right here, I really assessed, you know, how was I trading? Was it just bad luck? Did I make some mistakes? And then, you know, made the adjustments going through that. Okay, so that kind of catches you up on where we are intraday now, related to what we were talking about this morning, what we want to be looking at going into the close. I suspect not a whole lot is going to happen, and you know, we're going to just sit patiently today and in the next few days, probably. Okay, let's talk about trade. Let me actually see what some of your questions are already. LABU, let me see if I've updated the LABU trade here. Okay, no, there was another LABU trade that I haven't updated yet, I don't think. Okay, LABU last Monday. Okay, we'll get to the trade review after I show you how we trade review. Can I send, Matthew, can I send a link to the trade worksheet? Yeah, go ahead and email me, singjd1@aol.com. That's Sing, my last name, J's in John, D's in dog, 1, the number 1, at aol.com. I know it's old AOL, but I still use that. Email me and I'll send you the the basics of this. This is a really basic spreadsheet here. You can add it, you know, it's nothing fancy. Okay, another question about that. Yeah, Daniel, just email me. What's the best strategy if I have some big losses that are sitting? Okay, we'll talk, these types of questions we'll talk about at the end. So I'm gonna save these questions after I go over the trade review lesson. Do you post your trade journal? I used to post it trade by trade. I don't do that anymore for a couple of reasons. One, it makes it, you know, one is for me because I start living and dying by every trade, and I found that it affects me when I'm trading. So if this thing is being released and, you know, every one of these, when I'm going through losses, I start getting nasty emails and stuff. And I don't, you know, want to have to deal with that for one thing. But you guys have all the trade alerts, so you know what I've been doing. And then every quarter to year, I review them now. So you will see everything here, and all of it will be here. You know, we don't run from it. We'll talk about it here, like what happened during these periods. And I think in a couple of weeks, I'm going to do one of these big reviews of the trading. That's one reason. Okay. Oh, okay. The other reason is I found that too many people then just start following exactly what I'm doing, and that's not the point of this. I want you guys learning from the reports and making your own trades as well. So these are released in a sense because I do webinars once every quarter to 2 quarters. And then if you're having an issue where you're like, you know, you lost some of the trade alerts, or you just want to see what's been going on, just email me and I'll show you. I'm new to swing trading. Overall, would you say it is less risky than day trading? Okay, we'll talk about these questions after I get through the lesson here. So let's talk about trade reviews. Now, I do trade reviews. Right when I get out of a trade, I look at it and kind of analyze what I did right after. So, you know, yesterday I got out a win, and you know, I thought about what I did here, and it really was exactly how I should have traded it. But that's not when I really do the review and really, you know, grade myself on it, because you're still kind of fresh in the trade, still thinking the way you were thinking in the trade, and sometimes maybe you were getting caught up and it was really, you know, your decision making wasn't you weren't on top of your decision making, or you have these biases in the moment. So what I do is I then go back at the end of every month. I review all my trades, and that's, you know, I trade a bunch of different accounts. So this is just one of 6 other accounts I trade. I have 2 day trading accounts, and that takes a lot of time doing the day trades because there's so many trades, and then all the different swing trades. So I do that at the end of the month, and then I do another one. The most important time is at the end of the quarter. And then I do again, maybe I go do a little overkill on this, then I do a yearly big review. So I spend a lot of time reviewing my trades, and I think you get more from reviewing your trades than you do from a lot of other stuff. You know, trying to research things, learning setups. A lot of your learning goes on when you do these trade reviews. So I do them in 3 to 4 different time frames. Again, monthly, quarterly, and then yearly as well. So really important to do these, and I break my thought process down on the reviews in terms of trade entry, risk management, and trade management. And those of you who've been following me for a long time know I talk about this all the time. There are 3 different aspects to trading. There's the stock picking, which is what most people focus on, but to me, it's the least important thing. I mean, it's what we talk about in the reports. What stocks are we watching? Obviously the trades we're taking. But it actually ends up being, of these 3 factors, the least important thing. All of us can be watching the same stocks and potentially even trading the same stocks, and we end up having very different results. So I think stock picking is the least important thing. But that's number 1 here is we can call it stock. I wrote trade entry, but stock picking, whatever we want to call it. That's one aspect of what we're reviewing. And then I look at the risk management. And risk management and trade management, these kind of go together, but I still separate them. So more important than the stock you pick is your risk management. And I'm sure most of you, if you're Trade Report members, you're also following the 30-day challenge, and we're on day 13 now of that, I think, and I'm going to releasing another one on volume, and that's free. So if you haven't been watching, reading it and going through it and doing the exercises, go into the Bulls on Wall Street blog and you'll see the posts in there. And then when we're done, I'll create a big outline that you guys can just click on the links, and just specifically for that. And I should be done by the end of the month, or close to done with the 30 days by the end of the month. But we had 4 different challenges on risk management. Really important. I think probably the most important aspect of trading, more important than stock picking. I've never actually taken this up, but I've always said and thought to myself that if I could not pick the stocks, I was just given stocks I have to trade, I still could be successful without getting the benefit of setups and being able to enter where I want. Just by being able to manage my risk, I could at least be a break-even trader if I could do nothing else. So risk management is very important. And then there's trade management, and it goes hand in hand with risk management, but I separate a little bit. Basically, you have the trade entry, then you have the risk management, which you plan even before you enter the trade. And then you have the trade management. That's what did you actually do when you got into the trade? And this is where a lot of trading leaks come in, where a lot of trading mistakes come in, where most of the psychological issues traders have, the mental game type issues, they hit in this period. A little bit during the trade entry, if you think about FOMO and not entering at the right spots, but even those aren't huge mistakes. They're little leaks. The big mistakes come in area number 3. That's, you can give the guy 2 traders the same stocks, and they can even enter at the same time. But then what they do once they're in the trade often separates them. And a lot of people, they could even have the same game plan. And you guys, I know a lot of you probably have went through this. I've gone through this for years. I'm much better at it now. I rarely do this now, but you guys follow me. Sometimes it even happens to me. Where I deviate from my plans, I make stupid. You might make a stupid mistake. You might micromanage a position, whatever it is. You don't analyze the market correctly. You hear me sometimes saying, "We're in Netflix right now. We're in Netflix." Let me pull Netflix up so you can see what I'm talking about here. We're in Netflix. We've decided that the top of the range around 420 would be the initial target, but according to whatever the market's doing, we might go for a bigger win. And we did that on our last Netflix trade, and it worked out. We got a huge win on that. I think it ended up being 3 or 4 to 1. But that's part of trade management. How are we analyzing this? What strategic adjustments are we making? That's all trade management. So these are the 3 overall factors I'm looking at. And then I also think about, these are specific to the trade I'm taking. The win trade, the Netflix trade, the LABU trade, grading these trades, but then you also need to be, and this happens more on the quarterly, when you're analyzing your results quarterly or yearly, however, over time periods. How have you been trading on a macro level? Not that specific Netflix trade, but when you think about all your trades together, how did I trade during this period when the market ran 10%? Did I beat the market? Did I lag the market? Was I in the right momentum stocks? Maybe commodity stocks were running and I didn't trade any of them. That would have been a mistake. And you don't really get that just by looking at your trades. You have to analyze everything that was going on. I went through the drawdown. How was I trading through the drawdown? Did I make the correct adjustments I needed to make? Was it mistakes I was making, or was it just bad luck? We're trading these setups. They're based on probabilities, and sometimes you're just going to be on the wrong side of probabilities. If you have a 60% probability on a certain setup, still, if it's a good setup, you're going to be wrong 40% of the time, even if you did all the right things. So you need to look, did I make mistakes, or again, was I just on the wrong side of it? So you have to kind of step out of yourself and really analyze it objectively. So that's part of what we're doing on the macro level. Now let's go into the specific questions I'm asking myself when I'm taking these trades. And then I grade myself. You should have some kind of grading system, both for specific trades you're taking. So, the Netflix trade, would I grade that an A, B, C? I use a kind of a school system, A, B, C, D, F. You can use a 1 through 10 system. Years ago, I used to use 1 through 10, and I found I wasted too much time deciding, is this a 7 or an 8? It's much easier to give yourself just an A, B. And then if you want to break it down further and give yourself more levels, you can say A minus, A plus, B minus. But however you decide, there's no right or wrong way to do the grading system. But create a grading system for yourself on how you're trading, and do it for specific trades. Again, Netflix trade, what do I give myself on that one? A, B, C, whatever other trade it was, A, B, grade it, but then grade yourself on a macro level as well. During this period, how was I trading? If you're doing it on a quarterly level, how did you trade during that period? A yearly level, how did you trade over the year? So you want to grade yourself on that level as well, not just specific trades. And we tend to focus too much on specific trades, but you need to think of the big picture stuff as well. So specific questions I ask myself. Let's go specifically to the trade entry, and I grade myself on these three, and then I give myself a final grade on the specific trades. This is a specific trade. One, I ask myself, was it a good setup? Did the setup trigger? So if let's just go to win. So win, we entered win, and usually I have you should have a column here with the setup. You should have a column here with the risk reward, so you can just look at it and know on that. So if I don't do this for the stuff I release, because I feel like that stuff should be just for you guys, and if I release this to the public and they see all that, it's kind of unfair to you guys. So, but you should have that. You should have a column with the chart, so an annotated chart, stick the chart in here, your risk reward, what the setup was, comments, and then risk reward you had going into the trade, and then the realized risk reward. When you actually took the trade, what did the risk reward end up being? But for win, so we know this was a gap down reversal setup. So how are we analyzing this trade? Is this a good setup? Did the setup trigger? How good was my specific entry? Did I chase? Did I enter at a good point? So if we look at here, just on the entry level, so forget about and one thing you have to do when you're doing these trade reviews, you have to think process, not result. So I could have lost on win, and that shouldn't matter when I'm deciding if my entry was good. I'm not going to be influenced by the fact that we won on this trade. I could give myself an A even if I lost on the trade, and that happens a lot. I'll have trades I won and I give myself a C because I don't feel like I traded it correctly. And then there's trades I lose where I'll give myself an A because I did everything right and I just didn't win. This one, obviously we won. But now when we're thinking about the specific entry, This is supposed to be a gap down reversal. So what are my triggers for that? I want to see the stock gap down. I want to see it oversold. And I want a good, strong setup entry trigger. And we got that here. For this setup, it was beaten down. Stochastics were, way low here. Not only that, we were starting to see an improvement in that. So there was a positive divergence. And then we had the bullish engulfing. And that's where we entered. I didn't chase. I didn't enter too early. I was tempted to enter here, but I wanted the trigger. And we got that right here. So I would give myself an A for the entry on this. This is exactly what I'm supposed to be doing, regardless of whether this was a win or a loss. I would give myself an A again, even if it was ended up being a loss. Risk management. What was my risk reward on this? So entry, and these are just general numbers. I forget now the exact numbers. Well, we know the exact entry. The exact entry was 154.40. And I think my stop was around 4 points on this. So I risked $4 and I made 7. So almost 2 to 1. 7 to 4 would be pretty close. 8 to 4 would be 2 to 1. So we're almost there. I don't know what the exact percentage is. Not quite 2 to 1. Not the 2 to 1. 2 to 1 is not a requirement. You hear 2 to 1 a lot of the time, but that's not a requirement. But generally, we like to, be at least getting 1.5 to 1, 2 to 1. I'll give myself a B plus on that. Pretty good. Risking $4 to win 7. You're going to win a lot of money over time if you consistently do that and have just a 50% win rate. You're going to crush it. So I'm happy with that. So I'll give myself a B plus. It wasn't, 3 to 1, 4 to 1, where I'd give myself an A plus or anything like that. But it was good, a good trade, B plus. So that's what we're thinking about in terms of the risk management. So what was the game plan? How much was risked? $4. What was the potential reward? The potential was actually, when I said it, I was thinking more 8. So it was 2 to 1 on that. Did these levels make sense with support and resistance levels and the volatility of the stock? So resistance was where it gapped, our potential exit was where it gapped down from. So that's exactly what we're supposed to be doing. Our stop made sense. That was right around where the lows were here. And then how volatile is the stock? When I say volatility, think of it this way. Does the stock have the potential in its past history to reach that target quickly? And you can see how, these ranges on Win, it does. It's a volatile stock, and it moved very quickly when we entered too. So yes, on all those. So overall risk management was very good. We could give it an A minus, B plus. I said B plus. Let's say A minus or B plus. It was what we want to be doing. So A on the entry. We'll say B plus on the risk management, and then trade management. These are the questions you want to be asking yourself. And guys, I haven't had any questions here, so just to make sure everything's good, can you guys hear me, see me? You're seeing everything you're supposed to be seeing here. Trade management. Okay, good. These are the questions I ask myself. How did I handle everything once I entered the trade? Did I stick to my game plan? Was I tempted to micromanage, or did I micromanage? Did I get out too early? Did I not get out when my target was hit and the stock pulled back? All these different things. Did you stick to your game plan? And the answer is yes. We got in here, we sat here and waited, even on this gap up, where I know a lot of, I got emails from a lot of you guys saying you got out on this gap up, that you were worried about the 9 EMA here, and that would be micromanaging. I'd give myself, if you exited here, and not even just because it did pop the next day, you would be giving yourself at least a C on this, because you didn't stick to the game plan here. And there's a strategic reason we made our target up here. And that's because these stocks do tend to float to the gap fill level if they reach this point. So did you stick to your plan? And we did here. We did exactly what we were supposed to do. So how did you handle it once we entered the trade? We did well. This is where most of the emotional issues come into play, where people take too small of a win, even though they had a good game plan. We tend to Once we get in that win territory, we have a hard time sticking with it. We just want to grab that win. Fear, greed, all these different things. Watching every tick and being worried, like if this had gapped up here yesterday and then pulled back, a lot of you would have got out here, even if I didn't. And that would have been a mistake. Even if you end up, pulling back here, you just, over time, you can't be trading that way. You'll never get the big wins that you're supposed to get, because it's very rare for your stock to just run straight up to your exit level without some volatility. Did you stick to your plan? Did you make strategic adjustments? So if there were adjustments to be made, did you make them? We really didn't have to do that here. It pretty much did what we wanted it to do. But oftentimes there are strategic adjustments. Sometimes where I say stick to your plan, sometimes there is a reason you need to get out. Today, where I put my stops on some of the stocks today was higher than we had initially planned. So for example, Netflix. There was a strategic decision today because of what we're a little worried about what's happening in the market, and knowing we are already in win territory, we don't need to turn this into a big loss. So I did move my stop up a little bit from where we initially had it. And also we know now the 9 is up here. So once it breaks the 9, there's a good chance it's going to break down. So why still keep our stop way down here? So we raised that stop, and I said 398 this morning. I actually probably could raise it a little higher, but I was worried about intraday volatility, so I at least kept it at 398, and still that would only be around a $500 loss. So think about strategic decisions. So sometimes there is a good reason to deviate. So was there a good reason, and did you make that adjustment? And then finally, your realized risk reward versus the game plan risk reward. So we have this game plan when we get into the trade, and then sometimes things change. So if your plan was to get 2.5 to 1, did you hit that 2.5 to 1, or did you get out at 1.5? Or did you make a strategic adjustment and get out at 4 to 1, like we did with Netflix, a few weeks ago? So always know what your planned risk reward is, and then what actually happened, and that goes on the trade management side. So again, with Win, I would give that A minus B plus. So overall, this was a good trade. I would give it, somewhere between, we gave ourselves an A on trade entry, A minus B plus on risk management, A minus B plus on trade management. So this is basically like an A minus trade. And that's what I would grade myself. So I keep a column in my trade review charts, and I would give this trade an A minus. Now that's for these 3 factors here. Now there's one other factor for the stock specific stuff we're doing, and that is, what was the market doing during this period? And you guys always hear me talking about the market, even though we're not usually trading the market. I mean, sometimes we trade, SPXL or, one of the market ETFs, but in the trade report, the first thing you hear every single day, and it might get boring, but you hear me say, what's SPY done? What have the Qs done? What has IWM done? And then we let that set the tone for what we're doing. Now that's not going to be the be all end all, and just because the SPY might be down, that doesn't mean I'm not going to take a long position. But the market is a big influence on stocks. No matter how good your stock is, if the market is tanking, your stock is not likely to do good. I would say the market influences your stock. At least 50% of your move is what the market is doing. So we always want to know, when I was in this trade, what was the market doing? And then you factor that into your grade as well. So one way to look at it is, let's say the market was running like crazy these past few days, and then I got out here and I decided not to adjust, and I got out at this level. I wouldn't be happy with that, because I should have known, even though we hit our target level, the market's going to carry this further, and I should stick with it a little longer. So maybe then I would have given myself, instead of giving myself an A minus B plus on this, I would have given myself a B minus C plus, factoring in what we know about the market. So always kind of look at what the market was doing when you took that trade. So again, going back to that Netflix trade, we made the adjustment because the market was running. And there's some trades in here where I didn't make, I'm talking just because we've had a lot of good trades right now, I'm talking about good trades, so I'm not trying to brag or anything, but going through the bad period here. When I went through this, I asked myself, during this period, should I have been taking these trades? Like on a lot of these trades, the setup trigger was an A. So on almost every stock, I didn't make any mistakes in setup trigger. So when we think about the three factors here, this part was an A. But where I feel like I made some mistakes, and planned risk management was pretty good as well. So all of them were, B plus, A minus on these two levels. And then some of these on trade management were good as well. They just ended up being losing trades. But some of these, the trade management I felt was not good, and I gave myself bad grades on that. Realized risk reward. I don't want this TQQ trade here. I don't want to be losing 2,500 on a trade. I don't want to be losing 2,200 on a trade. So I dinged myself on that. So this was a D trade. This was a D trade. Even though I felt like the entries were A's, this should have never happened here. Whereas the Tesla trade was a losing trade, but everything about that trade, and I'm not going to pull it up here, and we'll do that when we do the big trade review. But just thinking about how we apply this, even though this was a loss, I gave myself an A minus B plus on it. I did everything right. It just didn't work out. And according to the market too, everything was fine on this. Whereas these were not good trades right here. So that's how you have to be breaking it down. So that's stock specific. Now you also have to be thinking, and a lot of people don't do this, they just focus on the stock specific, but really I believe that the macro part is more important. So what you need to be thinking about on the macro level, we've already kind of touched on these topic on the trade in the report video today and earlier in this mentoring session. Your risk reward on a macro level. So we focus on the risk reward, the RR for our trade. Did we get 1.5 to 1, 2 to 1, 2.5, 3, 4, whatever it is? But then you have a macro level risk reward. So think about your account size. So if it's 100,000, you want your wins to be somewhere between, say 500 and 1,200. Sorry, your losses to be between 500 and 1,200, and then you want your wins to be somewhere between 1,200 to 2,000. So they should be like that on a macro level. So let's say if your stock specific risk reward, you got 3 to 1 on the trade, but you only ended up making 800, which is less than what your losses normally are. On a macro level, you're not trading correctly, even though your risk reward is correct on a stock specific level. And some people get confused by this, so let me explain it again. So let's take let's take win here. So we got 2 to 1, almost 2 to 1, 7 to 4. Well, let's just call it 2 to 1. Let's say we get 2 to 1 on that stock specific trade, but because of the way I position sized, I ended up, let's say instead of making $13.95, let's say I only made 700 on this. Even though my stock specific risk reward ended up being 2 to 1, on a macro level, my risk reward would have been poor because I only made $700 or $800 on it, and I need to be making more because my losses are usually $700 or $800. So you need to be thinking stock specific risk reward, and you need to be thinking about the risk reward on a macro level. Your wins need to be bigger than your losses. We were talking about this just earlier here. If we lost on all 4 of the entries we're in right now, we're only going to lose $1,700 or $1,800. Considering how big our wins have been, only losing $1,800 on 4 trades is fantastic. That's exactly how we want to be trading. So on a macro level, we have been trading. If you've been trading like I have here, we've been knocking out of the park during this period, exactly the way we should be. Whereas again, during the drawdown, my macro level risk reward, during the drawdown here, my macro level risk reward was flipped and not very good. My win was $1,500 here. Obviously these were big wins here, so it corrected there. But in this period, 1200, 2000, 1750, 1730, 1500, and then I had losses that were too big. 1500, 1700, 1400 is okay, 1100 is okay, 22 can't happen, 25 can't happen. These were gap downs too that hit me, but still, we don't want that. That's not what we want to see. So you want to see good macro level risk management as well. And then you want to think about what is the market doing year to date. Now, that doesn't guide us completely, but you want to be beating the market. So right now, we're up close to 15%, 14.5. Well, we'll just round it up to 15. And the SPY, so when we say the market, that's SPY. That's your main guide. That's the benchmark. SPY is up 3% year to date. So obviously we're crushing the market. And you can also think of inflation. You always want to be, above 1 or 2%, no matter what SPY is doing, just to be beating inflation. Or think about savings rates. We're crushing those. Those are 1 point something percent right now. So we're crushing that at 15%. We're crushing SPY at 15%. So, and then you can also look at what the Qs are doing and what IWM are doing. Qs are up around 10% this year, and IWM is up 10%. So we're beating those as well at 15%. So on a macro level, year to date, we're trading very well. We're beating all of these benchmarks in terms of inflation, savings rates, SPY, Qs, IWM, all of that. So think of that and grade yourself on that. How am I doing in relation to all of these different things? And then what sectors were moving during these periods? And you have to do a little more analysis. You have to remember what you were thinking during these periods. I keep, I keep a journal by my desk here. And if you follow me on Instagram, I post this journal every once in a while. And a lot of what I do in the trade report is based off, what I've written in the journal here. And I do it old school. I don't use the documents. And, I'll flip through the journal and I'll say, oh, wow, in June, I kept going back to these different sectors. And did I actually trade these sectors? And you hear me every morning. I talk about, not only do I talk about the market, I talk about which sectors are moving. And most of our trades come out of those sectors. But then I'll do an analysis. If I'm doing the quarterly or yearly, I'll take a period of time and then I'll pull up the industry indexes here. You can see to my left, usually down here, the industry indexes are pulled up. And I'll look at year to date. What were the periods and what different sectors were doing well? And did I trade those sectors? And if I missed those sectors, I'll ask myself, this was a missed opportunity. Why did I not trade that? And that fits into my macro level. Was I doing things correctly during these periods? So you need to think about that. And then also, what momentum stocks were out there and did you trade them? And I always think about not only what I traded here, and a lot of people just focus on what they traded, but you have to focus on the missed opportunities. Let's say, there's a couple of stocks that were the big winners during the year, Facebook. Did I make a few Facebook trades? And if Facebook was not showing up, why did I not trade that? And then think about that. You learn from the mistakes you make and then take notes, have a journal and, have all these corrections down that you need to be making. And you learn way more from this type of analysis than you do from, a lot of the other stuff people waste their time on when it comes to trading, like back testing and all that kind of stuff. This is where you'll really learn when you do these type of this type of analysis. And then relating to what I just said, analyze, make adjustments, think about adjustments you need to be making, mistakes you made, and also strengths. And people forget about that. What was I doing right and how do I replicate that? Keep replicating what you're doing correctly. So that's what you're thinking about on the macro level. So, when I did this during this period here, I really analyzed this very closely, process oriented. Most of it, I felt like I was trading fine. I just was on the wrong side, but there were some tweaks I had to make. I had to make some tweaks to risk management. I told myself on some of these, I loosened my stop a little bit because past history had said that these things will bounce back, and obviously it didn't. So I made a pact with myself after this drawdown period, I'm not going to do that anymore. At least during the, not forever, because oftentimes it does work out, but at least during this period, that's adjustment I needed to make. I need to get my risk reward in line. And you can see how risk reward totally flipped during this period here. Another adjustment I made was to trade the leveraged ETFs a little less, and that's where some of my biggest losses had come in. So you can see during this period, I went heavily with momentum stocks rather than leveraged ETF. I did trade ERX and UWT, which actually ended up being a really good trade, and LABU. But for the most part, I focused on momentum stocks, and I also made a decision to go with a little more of the junk. So here it was mostly big guys, big momentum stocks, and you've seen me throw in a few more of these speculative junk type stocks in here because I'd missed, that was the missed opportunities. I felt like I was missing opportunities in those in here, and then we adjusted. So you can see how I made these adjustments where I felt like some of this couldn't be avoided, but there were some things I could have done differently, and we've made those adjustments. And you're often going to find the drawdowns can be frustrating, but oftentimes when you go through a drawdown, when you come out of it, it ends up being one of your best periods. So, you know, there was a drawdown here through spring. I was down about 3-4%. And then that coming out of that, that's led to about a 20% move. So we've crushed it during that period. And you'll see that a lot where you get through this frustrating period, but then it leads to one of your big runs. Okay, so I think I'm done here with what I wanted to talk about. So this is what you guys should be putting into practice now. And it's really important to make time for this, you know, end of the month, end of the quarter, give yourself maybe a Saturday morning before you go out and do stuff, give yourself 3, 4, 5 hours and go through this, have a notebook, write down everything you've been doing, grade yourself the way, you know, do everything we talked about here, and you're gonna find a big improvement in your trading by doing this. Okay, all right, let's get to your trades and your questions now. So I'm gonna, and you can keep asking questions here. I took way more time than I thought it would take to go through this, but I'll get through as many of your questions as I can. All right, Krista, can you email the trade review outline? Yeah, I'll do that. I put this up together really quickly. I want to do a better job of having something formal. But you know, I think I'll put something up like this, and maybe I'll put it in the Swing Trader dashboard on the website at some point. And right now you can just kind of take a snapshot of this. But before I release it, I want to make sure everything is exactly the way I want it. What broker do I recommend? So this is not related to what we're talking about here, but I use Interactive Brokers and also Speed Trader. So those are two different, and it's good to have backup brokers. I also use for my day trading a local broker here that has access to hard to borrows for day trading that, and you probably, if you day trade a lot, you probably want to have something like that as well. All right, Jake, tons of great info. Thank you, Jake. How do you analyze if you have the same amount in each trade? Maybe our return would have been higher. I noticed year-to-date returns dropped when we increased our trading size 6 or 7. Cal, I don't know what you're talking about here. If I had traded the same amount, what do you mean by amount? I don't care about the amount, the position size. I care about how much I risk. And my risk has pretty much been in line throughout the year. Once I got into the trades, you know, I dealt with some gap downs and we loosened some stops here. But for the most part, I am risking between 0.7 and 1.2%. So basically, you know, $700 to $1,200. And that's pretty much been in line throughout the year. And that's what your thought process should be when you're trading is how much you're risking towards how much you can potentially win. Size, position sizing doesn't matter. So you shouldn't be saying I'm going to take $20,000 position on every trade or $1,000 position or whatever your account size is. By looking at all the sectors, are you saying that you are okay with getting into a stock that meets your criteria as opposed to what some say stick with a few stocks that you know? Yeah, for swing trading, you shouldn't be just trading the same stocks over and over again. You can do that as a day trader. Sometimes, for instance, um, this is getting off topic here, and I know a lot of you also day trade or been through the boot camp and you watch Canal. Uh, so there are a lot of different strategies. I have specific day trading strategies I trade, and the stocks are always changing in those. But then there are a few stocks I know the character of. You know, Netflix, Facebook, Tesla. One, they have a lot of intraday volatility, and you get a feel for these stocks, so you can trade them constantly. But that's more for day trading. For swing, um, you need to go where the opportunity is. So, you know, if I watch Netflix and Tesla every day, but those aren't the stocks that are moving during this period, why in the world would I keep trading those? So you want to be adjusting according to what setups are triggering, what the market is doing, what industries are moving, and then be trading those. All right. Okay, I got Cal is asking about PBYI. I got stopped out earlier in the year, right here. So entry was 62, 57, good risk, only lost 600 on the trade. Okay, should we consider going long again? Okay, it hasn't even been on my watch list. Let me take a look at it. PBYI. You know what? You might be right. What I was thinking about that didn't work at the time, maybe it's ready to bottom here. There is no trigger right now. It's just kind of consolidating here, but maybe it could be bottoming here. I just feel like right now there's better opportunities and other things. And even, you know, this is a biotech stock, and, you know, PBYI hasn't moved while LABU, why would I trade PBYI right now when, you know, biotech itself has done this during the same period? So yeah, it could be setting up here, and maybe if you get the trigger, you trade it. But I don't think it's something. There's basically, think about the opportunity cost. If I'm going to trade this, what am I missing out on? And there's better opportunities right now. So yeah, you could watch it, but I think this is why it's not on my list right now to trade. How do you identify which sectors are getting more accumulation? Yeah, so Aditya, this is not something I can't get into deeply right now. I mean, I do in the boot camp, I do a whole session on sector analysis, my accumulation when I go with my mentoring students. We spend hours talking about sector analysis, accumulation. But you guys follow me all the time, so it should be kind of sinking in what I do. Um, you want to be looking at these sectors on a weekly and monthly basis, and then looking at the volume patterns. And you have access to, I've already done the accumulation distribution 30-day challenge. So you can go on the blog and it lays out exactly what I do. So think about it in those terms. The simple answer is you want to see a lot of green coming into this sector. You want to see money flowing into it and not a lot of red money flowing out of it. So if you're seeing that and you're seeing percentage gains over a period of time, then you know it's a sector you should be paying attention to. And go back into the 30-day challenge and start. I've done 2 of the volume. That's basically the area I'm going over right now. So there's 2 more volume challenges that I'm going to put up, but 2 I've already written, and I think they both relate to your question here. So go read those, and there's a video as well. So that should be helpful. Okay, let's see here. Krista, love seeing your pics of your trade journals on Instagram. Oh, fantastic. And if you guys aren't following on Instagram, I do a lot of Instagram stories to let you see kind of a peek behind the scenes of what I'm doing. So I'll show, like, I'll post pictures of my trade report journals. I'll do a little quick video, like they're like 10-second videos of what I'm looking at right now. So if you're not following me, make sure to follow me on Instagram. Robert, I already talked about brokers. George, I was a little late. Do you have a grade sheet for these areas? Yeah, just make a column here and label it, you know, stock grade and then macro level grades. And that's really all you need to do. Do you adjust your stop level in more volatile market environments? Good question, Paulo. Yes. So you have to think about your volatility. And again, going back to that 30-day challenge, and it's free for everyone. So go look in there. Um, Actually, it's this is off topic here, but that thing that I'm putting out for free is better than most people's courses. So you're going to get a real there when we talked about risk, and I think I talked about volatility. I talked a lot about volatility and market analysis in that. So go back and read that if you haven't already. But I definitely factor in volatility. If the market is very volatile, I'm going to take a smaller position size and give myself a wider stop. So I'm not going to increase my risk. Excuse me, my risk is going to stay between $700 and 1.2, or not 7% and 1.2%. But I'm going to take a smaller position size and loosen the stop because I know there can be more intraday volatility. So, I know when I look at Netflix can move, 379 to that was 20-point move in one day. Or sorry, not 20. Well, 379 to, yeah, 20-point move. Here, it moved, this looks like a tight candle, but it moved from 397 to 407, 10 points in one day. So knowing this moves, the way this stock moves, I need to keep a pretty wide stop on it, and also factor in where the support and resistance levels are coming in. But volatility is definitely a factor in my stop loss. You have to be thinking about that. Not only market volatility, but the stock's volatility as well. If the stock has a range where it moves, 10 points in a day, it would be stupid to have a 3-point stop. You're almost guaranteeing you're going to get stopped out, even if the stock ends up doing what you expect it to do. All right, Guillermo, was the candle before the gap point not a resistance point? I think you're talking about when. Candle before. So I entered here. Yeah, this would be, no. Oh, okay, you're talking about, yeah, you're right. And I've went over this with Guillermo. We do a lot of one-on-one mentoring. And he is right in the sense that with this setup, oftentimes my target is this initial range here before it pulls into the gap. But I had to make a decision here. Where do I want to place my stop? Where do I want to place my target? If I targeted this level, I was going to have to use a much tighter stop, and I didn't want to use a tight stop. So because of that, I made the decision I have to go for the gap fill and not the top of this range. But you're right, that is something that should be considered, Guillermo. I notice your swing trading entries are normally at the end of the trading day. Is that recommended? I find myself taking trades much earlier. There is no rule about waiting till the end of the day. I know it seems like that because over the past this year and a lot of last year too, and it's been kind of a new thing. Before I never cared about that, but what I've noticed in a lot of what you're doing, you watch the market every day. You do this analysis. You see me doing this analysis every day. Whether you guys are doing it or not on your own, you're following me. So all this stuff is going in your head, and you'll probably notice you start to develop a feel for what's going on in the market. And what I've noticed this year and a lot of late last year is the initial move in the market is not what happens going into the close. And a lot of times, a lot of fake outs. So because of that, I've been more hesitant to enter earlier. You have seen me take some earlier. So I've been waiting till the end of the day, and there's advantages and disadvantages. Advantages, I get all that information, and then I know by the end of the day where everything is ending up and what's triggered in the market, in the stocks. There is a disadvantage. Sometimes stuff keeps running, and if you would have entered earlier in the day, you would have entered at a good spot. By the end of the day, it's moved so much that you can no longer enter the position because you'd have to use too wide of a stop. So there is a risk in waiting till the end of the day, but there's also a risk lately in entering early. So I've been entering more towards the end of the day, but there's no rule. It's basically a function of what I'm seeing in the market right now. If that changes, if I start to notice that, hey, whatever happened, and that's why in the morning today, even I said, we're gapping down in the morning, but let's see if the market reverses. And you've heard me say that a lot, not only when the market gaps down, but even when the market's gapping up in the morning. Let's wait and see if this level holds. Where there's some markets where that's different. And right now it's just holding what it did in the morning. We're still at 0.68%. So nothing's changed at this point, but we still have 3 hours until the market close. But yeah, it's a function of the market. And if I see things changing, I won't wait as much. So it may seem like that's a rule, but it's not. I don't have any hard and fast rule about when you enter in the day. Do you have an overview of all of your trading setups? No. You'll get right now, you should have a feel for the different setups I'm trading. Continuation patterns, a lot of that. Breakout pullbacks, gap down reversals. And when I go over a trade in the report, we talk about the setup. So it's kind of an organic process where as you follow me, as you listen to me every day, and I hope most of you listen to the videos. The writing is just a summary of what I talk about in the videos, but invest the 5 to 10 minutes a day to listen to the videos. And what I've found is most people, after they start listening to me for a month or two, they get a really good feel for what I do. And a lot of people will tell me, I took the trade 30 minutes before you did. And they're thinking the same way I did, and they start doing the same things I do. Any way you can blow up your fonts so we can read the content better? Try blowing up what you're seeing. It's going to ruin, I don't want to mess this up. Try blowing it up on your end. And let me see if I can, I'll make this a little bigger and leave this up. Let's go to, okay, here's 125%. Maybe you can see this a little better here. I'm going to leave this up for like 20 seconds if you want to take a screenshot. And then in a little bit, I'll go scroll down and you can take another screenshot. I'm new to swing trading overall. This is Eric. Overall, would you say it's less risky than day trading depending on share size? There are different ways to look at this. The big difference in terms of riskiness is dealing with the close to the open, basically overnight. That's something you don't have to deal with day trading. You close out your positions, you don't have to worry about gap ups and gap downs overnight. So in that sense, there's some risk involved, but there's a riskiness to day trading as well in terms of frequency of trades, moves happening very quickly where you thought you were risking 0.3% and you get a big flush and you end up risking much more. And there's a lot of different factors. So I wouldn't say one is riskier than the other. You just have to know what the risks are of what you're doing. And the big thing with swing trading is the overnight. So you have to think about that. The best laid plans don't always work out. You may be risking 1%, but then there's a gap down and you have to deal with the 2%. I mean, that's kind of what happened to me during this period. I dealt with some gap downs, and you guys know, if you look at this and you see 2,500 loss, you guys know that's not my risk range. But it happened here because of one of the risks that happens in trading, gap downs. So you have to think about that. And, my philosophy on risk is for swing traders, you should be between 0.5 and 2%. 2% is very risky because, if you're risking 2%, you deal with a gap down, you might end up risking 3 or 4%. And that's way too much. So that is something you have to think about. Okay, so I got some more broker questions. What's the best strategy if you have some big losses in your portfolio? My learning lesson of not managing my risk. Yeah, before I joined Bulls on Wall Street, should I get rid of it and take the loss or wait for a pullback? Yeah, you need to cut your losses. The best thing to do, I can't give you specific advice on your trade. That gets into, like being a financial planner, but I'll just give you general advice here. If you're sitting, so VS here, he is in a trade that sounds like he's been holding. So Faye has been in the low 30s. So he got in the 30s and it's at 16 now. Obviously you should not have been holding this long. You should cut your losses. long ago, and it was 30 a long time ago. Now, the best thing to do at this point is just get out, cut your losses. Not specific to this, this is general advice. Cut your losses and then now make the adjustments. Anything you trade now, you should have this game plan and these rules in place so you never do this again. That being said, if you are stuck like this, you should think to yourself, what can happen to the stock now? So let's say you were in a stock that was at 40 and now you're sitting on it at 20. Maybe give yourself a point or two and see if it holds, but have a cutoff level now. If you were in at 20, have a hard and fast level at 18, I'm going to get out. So that would be my general advice. And then don't let it happen again. Okay. All right, looks like I've got all of the past questions. Let me see any new questions here. Okay, do you journal daily or go back week or end of month? So anytime I get out of a trade, I throw it in the journal and I do a quick look over of it. But really the deep analysis, and the main reason for that is I want to step away from my thought process right now and see it with clear eyes. And it's almost impossible to do no matter how hard you try in the moment. So it's good to step back, after a month, after a quarter, and then look at it. Plus, at that point, you get to think about the overall macro as well, which is hard to do when you're just daily reviewing. For your day trades, you should be doing it. You should set aside at least 20, 30 minutes every single day to review what you did that day. That has to be on a daily level. Okay. Is your micro versus macro view related to position sizing versus overall account size? Not sure what the question is, Paolo. Yeah, you are thinking of your overall account size and the risk you're taking. So, I'm focusing on this size of account, but I know a lot of you are trading smaller. Some of you are trading bigger than this one. Let's say you're trading 10,000. Your risk on a $10,000 account should be somewhere between $70 and $150 per trade. So that's the way you want to be looking at it. I don't care about position sizing. I've said that many times, but I think some of you have a hard time grasping that. The position size does not matter. If you have a $10,000 account and you enter with the full 10,000, because of where we stop out, while technically in a sense you're risking 10,000, and if the stock went to zero, you'd lose $10,000. That's never going to happen. It's what you're risking. So the 10,000 that you're in is only significant in the sense that it doesn't allow you to take other trades. But in your overall risk, all that matters is where you're going to get out. And so that's what you need to be thinking about. Okay, Cal, 1,200 shares on FCX. That doesn't give me enough information. I need to know when your entry one was and when your exit was. Do you hold through earnings? No, Monique. I rarely hold through earnings. There are exceptions to that, but generally holding through earnings is gambling. You don't know what's going to happen. No one knows. You can have insider information and you still will often lose. For example, you see this a lot with stocks. We've seen this happen a lot with Google, with Apple, with Netflix, where the stock has amazing numbers. The guidance is really good, beats all what the analysts thought it would do. And then the next day it does nothing or it even gaps down. So it's basically gambling. So we get out because the risk is just too much. We're risking 1%, but if it gaps down, instead of losing $1,000, we could lose $5,000. If your risk is generally $100 on a $10,000 account, you could lose $500 or $600, and that'll crush you on that size account. So we don't hold through earnings. That being said, I don't do this in my trade report trades for you guys because it's just too risky for you guys. And when I've done it in the past, a lot of you guys make mistakes with it. But in some of my more aggressive accounts, if I'm sitting on a big win, I will hold like half the position through earnings. So for example, if I entered something at 100 and going up into earnings, it's at 130. And now I have that buffer where even if it gapped down, I'm okay. Then I might hold, or at least hold half of it. Also, there are option strategies, and that's getting into a whole different ballgame. There's so much more analysis you have to do with options, and that I know a lot of you have traded options in the past, and most of you who trade options end up losing because people don't understand that there's so much more that, and you really have to, the way we master what we're doing here with swing trading, you have to master options, and most people do not do that. But there are option strategies you can use going into earnings as well that will help you hedge risk. Or there are strategies where you can keep your regular trade on and then use an options hedge to mitigate the risk if it gapped down against you too much. But that being said, in general, we don't trade through earnings for the purposes of what we do here. All right, Guillermo, I entered Amazon on Friday, 1702. Well, you picked a good stock. Amazon, 1702 on Friday. Okay, low was 1691, high was 1750. So you were playing the continuation pattern, remount of the 9, trend continuation, looks really good. Held up really well today, as has, I think, a lot of the FANG stocks have held up well today. So everything is good. I would say your risk, your stop is 1682. Good. You know, it's loose enough, and you've gone below the 9 and below this range. So I think that's a good stop level. 82 was your entry, so you're risking 20 points. You didn't state what your target was, but your target should be, if you're risking 20, at least 30, better to be around 40. You entered at 1702. The high of the range is 1760, so you're good there as well. You could play it to the high of the range and you're going to get 2 to 1. So we can't grade their trade management yet because the full trade hasn't happened. But in terms of, if I was grading this as my own trade, in terms of entry, well, I would say if there was one thing to consider would be the market. But even when you entered on Friday and the market was much stronger than it is today. So I would say even that was all good. So I would give if I was taking this trade, I would give myself an A or A minus for entry. Risk, I would give A minus, B plus, good on the risk reward. And then we'll see what happens with the trade management. But overall, I mean, whether you win or lose, this is exactly what you should be doing. So focusing on the process, this is exactly what you should be doing. And over time, regardless of this trade, win, lose, over time, if this is the way you're trading, you're going to be very successful. Daniel, is getting out of a big gap up day sometimes a good adjustment? Yeah, it depends on what's happening. But if the stock is already extended and then gaps up, then you should probably get out. If it's a break out of consolidation, then you probably want to stick with it. That happened with Win, right? It did gap up, but we stuck with it here. What was the reason for selling Roku on 613, and how would you grade the trade? Great question, Nick. Let's take a look at Roku. So this one was so 537.88 on 6/4. So I'm not going to go through the market analysis, but just stock specific here. Entry is an A. This is a bread and butter setup I trade. Specific to where we are here, it's a breakout pullback and hold of the 9 off a hammer. Textbook, exactly what I want to be doing. And then also this happened within a bigger setup, which was a bottoming formation in an IPO stock. We talked a little, I think I was talking about this in the videos when it was happening. So overall, I like this a lot. And for the entry, I would give it an A. Risk management, I'm forgetting now exactly what my game plan was, but I'm going to guess it was at least 2-1. So probably give myself an A minus B plus on that. Now let's talk about the trade management. Top of the range, I think, was the initial target. 37, I got out at 43.75, which was the top. 43.75. Okay, so I got out right here. And my guess is I was initially looking to get out at top of the range, so I made an adjustment here. So in that sense, and let me see what the market was doing during that period. SPY was strong. QQQs were strong, so I made that adjustment. Factoring what the market was doing, I went for the bigger win. And how much did I make on the trade? 3,000. So it was on the high end. So whereas my win should be coming in around 1,500, we'll say 1,400 to 2,000, this was 3,000. So on a macro level, this was very good. I factored in the market, factored in what was happening in the market to make a good adjustment, and we entered towards the top here before it pulled back. So I would give myself, we'll say an A minus on this. Now, I think what you're probably thinking, well, it's at 46 now. So if we stayed in it, you made another 3 points. But look how long it's taken for that to happen. We extracted a very quick win here at the top of our risk reward range. We factored in what the market was doing. There was a deep pullback here. We could have always re-entered if we wanted, but I just saw better opportunities. So overall, I think this was a really good trade. You're welcome to, and that's my thought process on it. You're welcome to give me your grade on it, and I don't mind if it's negative or harsher than what I gave myself. Planning to go out at 1750. Okay, this is Guillermo. So 1750 would be 2-1, so I think that's fine. But he's talking about his Amazon trade. So what I would say with that one is think about 1750, and we're already almost there. So you could get out today, and you would get your 2-1. And we are concerned about the market as well. I don't want to say something to you and ends up doing the opposite, and then you miss out on something. So this is your own decision, but I'll tell you what my thought process would be. The fact that we're a little concerned about the market here, and maybe we wait till the end of the day to see what happens. If the market comes back roaring by the close, you probably stick with it and go with your initial analysis, which would be probably a bigger win. But there's also the fact that it's doing better than the market. So this is a tough decision. I'm not giving you good advice, but this is a tough decision here. You can't go wrong with getting 2-1, and you are getting 2-1 on this. So if you get out here, that's fine. You got your 2-1, you got a good trade. I do think Amazon is very strong here. If the market, and even on the gap down day today, the market is doing really well. I think there's not a right answer to this one. You get out here, that's fine. You hold on, move your stop up maybe to 1730. Let's see where the 9 is. There's basically multiple ways to play this, and none of them is wrong. But what I would not do, where you are wrong, is if you let this become a loss, or if you let this go maybe below the 9. I wouldn't let that happen either. But there is a decision to be made here. But there's nothing wrong if you get out here and you get your 2-1. Which one of the FANG is a better opportunity right now? Let's analyze both of them, all of them. So we've got Amazon. Amazon is very strong in terms of price action. There's a little concern on this red day here, but overall volume pattern is really good. Netflix, the one that I am, is almost the same exact pattern. We can't really even differentiate between the two. And Facebook is leading right now in the sense that it did break its high and is consolidating. They're all very close. And then Google has been the big lagger of the four, but now it has come back strong too. So, and if we see here, but the one thing I would say is the percentage gain has been a little less. I would say right now there's not a lot of differentiation. You can go with any of them. It's basically the same pattern. So we have had, you guys have been watching over the last few months. We have had periods where long ago Google was the leader. Now Facebook, Amazon, Netflix have been kind of going back and forth. Facebook was lagging and now it's leading. Now everything has kind of caught up and has been even. So yeah, not really much of a difference. If Win closes above the 9, do you think it can continue the run? What I would look for Win is, I think I talked about this in the report, and it's back on my radar. I always get out when they hit the gap fill, but then if it breaks the gap fill, I would look to re-enter. So if it can break 165, I'd look to re-enter and hold that level. A little bit of my concern though is it's a little complicated because the very strong resistance to 200-day moving averages right here as well. So maybe we can't do 165 and you have to wait for 170 to break. Okay, so still a lot of questions. I got to get out of here pretty soon. Okay, don't ask any more questions. I'm going to try to really quickly get through a bunch of these. So we did the lesson today, and I was going to do reviews of your trades, and I didn't get a lot of those questions. But that's okay. I'm here to answer whatever is going to help you. So if you guys feel like these type of questions are better, that's fine. And I think it's a little difficult to do this like this. I think next time I say I'm going to do a trade review, what I'll do is the night before, I'll have you guys send me your spreadsheets and I'll do some analysis on your spreadsheets and do it that way, because it is a little, I'm learning as I go and it's a little hard to do it this way. But if one of you guys sends me your spreadsheet and then I just go through and show you guys and we look at it, I think that'll be a more efficient way to do that. So that's an adjustment we'll make for next time we do a trade review. Would adding Huya here be reasonable? So remember, with anything we're considering adding, we have to factor in the market analysis. But stock specific, yes, it looks very good here. It looks good when we entered. It looks very good here. Now, your entry here today is not as good as where we entered 2 days ago. So your risk reward is going to change a little bit. So you have to think about that. But still, we have top of the range here at 50 that could potentially go to very quickly. So know that you can potentially win 14 points and then, think about your risk. Going on a long vacation, any trading books or articles or blogs, any recommendations? I say this all the time. For years, I read all the trading books and most of them are trash. They're not worth the time. 2 books that are really good and they deal more with the mental aspect of trading is Trading in the Zone by Mark Douglas. And it's either Trade Mindfully or Trading Mindfully, and I forgot who the author is. That's much more in depth than Trading in the Zone. Those are 2 fantastic books. And then I read a lot of books on decision making. They're not obviously they're not trading specific, but anything on decision making. And there's an article on my own personal blog, and my own personal blog is more kind of mental game kind of stuff. Let me just show you guys the link to that. It's pauljsingh.com, and 21 books that taught me to trade. And there's actually only 2 trading books here, and the rest are all basically decision-making type of books. But all of those, they'll actually make you a much better trader by reading these books. So just Google Paul J. Singh 21 books, or just go to Paul J. Singh, and you'll see the post in here. Okay, Guillermo, you got 1.8. That's good. Yeah, you can't complain about that. And normally I would say, yeah, you probably should have stuck with it, but I understand what you were thinking, and it shows me that you put in all the lessons that we've gone over. I've been working with Guillermo one-on-one, and the lessons we've talked about have really sunk in, and I've noticed that you're trading really well lately. Do you think it makes sense to track pattern setups since every moment in the market is unique? I'm not sure exactly what your question is, but if you're talking about back testing setups, that can be very tricky because, like, for example, say you track gap down reversals, the setup we traded with Win. If you take every gap down reversal over the last 3 months and track them and get data on that, that's not going to give you the full big picture, because anybody, you guys who know me well, know I always talk about adapting to different markets, and certain setups work better in certain markets. So we're in a specific market. So gap down reversals, say you're getting a 70% win rate and you're crushing it now in this market. That doesn't mean in a different market it'll do as well. So you really have to, if you're talking about tracking patterns, it's very in-depth what you have to do. And that's a mistake a lot of back testers do. And that's why a lot of the back testing you see is absolutely worthless, because there's so many factors you have to take into account. That doesn't mean back testing is not good, but you really have to understand what you're doing in terms of the time frames, the markets. So what I've done when I've back tested is I take a setup and I go, okay, in this type of market, in a market that's running, how does this setup work? In a downtrending market, how does this setup work? In range-bound markets, how does this setup work? And then go accordingly. And you guys will probably notice in certain markets, all of a sudden I'm trading a lot of continuation patterns. In other markets, I'm trading gap downs. In other markets, I'm trading breakdowns. So, and then, we haven't really had a downtrending market, but then in downtrending markets, I trade a lot of obviously downtrending short patterns, but also bounce plays, extended bounce plays. So you have to know what market you're in if you're tracking patterns. About having losses sitting around. Yeah, I did, Vineet. So I answered your question. So when the video comes out, go back and look at it. If you risk 1% and your risk is always 2 to 1, how can micro and macro not be in line? It's on your, okay. I think we went over that, Paulo. Let me illustrate it. If you're risking 1%, oh yeah, you're right. If you're risking 1% of your account and then you're getting 2 to 1, that is going to be in line. So you have to, you're actually right. You have to see what you've done here, and this is what I said. You have to think about the micro and the macro. So your 2 to 1 is the micro, your 1% is the macro. So if you're doing that correctly, yeah, you're usually going to be in line if it's 1%, but sometimes we're at 0.7. So when you trade at 0.7, you have to make sure your position sizing is such that you're still getting the wins you're supposed to be getting. But for the most part, you're right in your comment there. Vineet, you're too focused on Faye. I think you have to think about what's happening in the market right now. And you're sitting on big losses. What do you do? So go back to the video. I kind of went over what your strategy should be. I'm watching via cell phone. Is it possible to watch via PC? Yeah, I assume most people are watching on their computers. There will be a link to the video. So in the daily report, I've been putting that in, where there's a link and you click on that, and that gives you the videos of past mentoring sessions. And this one will be up in a day or two as well. TC2000 acting out on Max. What other charting services do you use? I don't use any other charting services, so I can't really help you on that. I've been using TC2000 for years. So for Mac, one, you can use Parallels on your Mac, and then you have access to the Windows version. But here, this is an older version, and you can also run it through your browser. For about a week, there were issues running through your browser, but now I think they've corrected that. But you can also use Parallels if you're on a Mac. What's your opinion on low float stocks that take less volume to move? All right, Paul, low float stocks, make sure they're liquid enough, first of all, because there's a lot of manipulation, especially for overnight swings. So I love low float stocks. And in you see me trade. You do see me trading low float stocks. A lot of these have been low float, but I do a lot of the bigger stocks here for the standard trend swing trading. But for my more aggressive strategies, which I trade in other accounts, they're almost exclusively low float. Things you have to be thinking about. You talked about volume here. They have to be liquid because otherwise they're just too easily manipulated. So I would never trade a low float stock that trades under an average of 200,000 shares per day. Otherwise, there's just too much manipulation. A guy can come in and load up on shares and manipulate the price. There are some of those pump and dump chat rooms that will manipulate prices. So you have to be very careful about that kind of scammy stuff with the low float. And so I avoid anything that is under 200,000 shares per day. Okay. Paulo, what recommend with gap downs? Yeah, 5%. I scan 5% gap downs every single day. So that is my starting point, but it doesn't have to be 5%. Win wasn't, I don't think it was a 5% mover. Jake, I do trade options more recently. So I don't like to do anything until I've mastered it or close to mastery. And I talked about options and what I've been doing over the last 2 years in my research has been focused on learning options, and I've been taking very specific things. Once I feel like I've mastered it, then I move on to the next thing. So I do some options. Definitely with the strategies we use, there are option strategies to trade them with. So if you feel like you are really good at trading options, what I do here you can apply to your options. Just make sure you really know what you're doing it. I've had some good trades. Win killed it, so I'm assuming you're talking about trading the options on that. Win was a good candidate for options because one factor, for those of you who don't know, one big, huge factor with options that is different than the trading we do is you have to factor in time. So there's time decay, strike prices. And a setup like Win, we expected if it was going to work, it was going to bounce quickly. So obviously with your options, it's going to work very well. Quarter two earnings are coming up. Will you be holding open positions in Netflix? No, I will not. So I will definitely be out in Netflix. Let's see, when does Netflix report? Uh, 7/16. I will definitely be out by the 16th. And a really good site for those of you guys who don't know for earnings is Earnings Whispers. So this is a really good site here for tracking earnings, and you get a lot of information, even on the free stuff that they do. NVIDIA got in at 246, stop 241, target 258-ish. I need your entry and exit dates, Robert. So give me the entry and exit dates. Today was big pullback. Is LABU at a breakout pullback spot? Yes, it is. So this is a spot to watch very closely. It kind of tested the high, has pulled back 7 or 8 points. We want to see how it holds a 9. There are decisions to be made here. One, again, you have to factor in the market, and that's what's kind of changed. I'm a little concerned about today, not hugely concerned, but we want to see how the market is reacting to what's going on macroeconomic events. And for the most part, it has acted well. It's pretty much ignored the concerns about all the basically all the China stuff that's going on. So overall, it looks good. There's decisions to be made here. Do you enter on the pullback hold, or do you wait for a break of these ranges? And that's a decision you have to make. But I do definitely should be at the top of your watch list, and then you have to make a decision on what you're going to enter. If you get a really good risk reward, you can just take a shot. I would say if you're getting 2.5 to 1 or better, where you decide you're going to place your stop and your target, it's a good setup. How do you identify which sectors are getting more money? That's Aditya, that's with the volume analysis. What website can I use to understand that? Bulls on Wall Street. I told you, 30-day challenge. Go look at that. I did a whole series on accumulation distribution. Go look at that, and you'll have a very good understanding of what I'm doing. Monique, can I send you questions? Yes, email me anytime. Paul, based on your last 18 months, what is your average holding time? I haven't calculated the average for this account. It depends on what I'm doing. I have more aggressive strategies where my average holding time is only a few days. My day trades, again, they're like 15, some are 15 minutes, some are an hour average holding time. For these types of swings, I don't like to give an average time because it really depends on what market you're in. And through 18 months, there have been a lot of different markets that we've experienced through this period. But generally, it's been a few days to a few weeks. So, 4 or 5 days to a couple of months has been the range. I'm asking because I trade options. Yeah, you definitely you need to know that. Take a look at the spreadsheet here. If you guys want to take screenshot, I was supposed to. Okay, so if you took screenshots of this, take a really quick screenshot here, and then you'll have what I've done in the document. Again, I don't want to release it until I have like a final version of this. I did this just specifically for this mentoring session. So go ahead and take a screenshot, and then you can take a screenshot of these trades here. I have to fill in the dates here, but go ahead and take a screenshot, and this will give you an idea of what the hold times have been. I would say be thinking a couple of weeks when you're trading options. So I'm going to leave this up here. Take your screenshot, and then I'll scroll down. Cal, I like BRZU too. I'm just in 4 positions, and that's something. If you're strictly following trade alerts, that's something you want to think about. Is like I like BRZU, and if you enter BRZU, I would say yeah, that's a good entry. And but just because I'm not in it right now doesn't mean I don't think it's a good entry. It's just I'm in 4 positions and I don't want to be in more right now because of a little bit of a concern with the market. So that's why you guys should be doing your own analysis as well, or going by the analysis we talk about in the report and then making your own decisions about other stocks you can be trading that we've talked about. Okay, Robert, buy was on the 6th. Okay, NVIDIA. Okay, July 6th. Okay, let's talk about this entry. Nothing wrong. No, I had it on the focus list. I personally wouldn't take it at that point because we have the 50-day above us, and we haven't really filled into this gap. That being said, you had good risk reward, and if it does break those resistance ranges, it could make a nice run. So even though I wouldn't take it here, I see what you were thinking, and it's okay for entry. You entered at 246.85, so right at the top of the day here. And your stop is 241. That makes perfect sense. So you're risking about 5 points. Target is 258-ish. That makes sense as well, and you're going to get really great. So you're risking 5 points, so 10 points would be 256. So I think you're right here. And there might be a tendency to micromanage this, but I would say just stick to your stop and target and see what happens. Okay, guys, really good session. I think we've answered most of the questions here. Session went a little different than I thought it would. I thought it was going to be just trade reviews, but that's okay, whatever helps you guys. And I think part of it was the format here. So next time, we do a mentoring session where I say we're going to do trade reviews. Excuse me. And now you know what how we're analyzing. And let me let me give you guys the next portion of trade 39. So here's the rest of it if you want to take a snapshot here. But now that you guys know what we're looking for when we do a trade review, you can start doing this on your own. And then next time I ask for a trade review session, what I'll do is I'll ask you guys to send me your spreadsheets before the session, and it'll be much easier to go through. I think that'll be a more efficient format for doing that. But still, this was a great session here. You guys asked a lot of great questions. Hopefully it was helpful for you guys. And what I want you guys to do is, these mentoring sessions are new. So we've done 3 of them so far. I want feedback in terms of what you guys want, if you guys like these and feel like it's worthwhile. If it's not worthwhile, obviously we're not going to do them. It's just a waste of time, but I think it is worthwhile, and the attendance numbers have to be enough as well. So I think we got today, and part of it is timing, but we got about 1/3 of report members that showed up at some point today, which is actually pretty good considering it's intraday and a lot of you guys work. And then we'll see how many of you guys are also watching the videos after they're recorded. And if I feel like enough of you are doing this or find it worthwhile, and then send me email, singjd1@aol.com. You can send Kanal or the Bulls guys emails as well, and let us know what you think to see if we should continue doing this. All right, guys, so next one's going to be in a couple of weeks. I'll figure out what the lesson is going to be. So with each one of these, I want to have something educational where I do a lesson and then answer your questions, the mentoring aspect of it. So trade report will be out tomorrow morning probably, or maybe tonight, and hopefully our positions hold here. All right, guys, talk to you later.